Well, the world didn't end on Saturday, September 23rd, 2017. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of September 25th, 2017. And if you were following the news, researcher, I say with quotes around it, researcher, David Meade had regretted to inform the world that it was going to be ending on Saturday, and of course it didn't. Here we are on the 24th, Sunday, and we're still here, and there's still a world, and forecasters have been around for hundreds or even thousands of years, making projections and drawing charts and diagrams about what the Book of Revelations has to say about the end of the world, and so far they've all been wrong. The irony of that is, if anybody ever does get it right, they will get absolutely no credit because there won't be anybody here to say, "Oh, dude, you nailed it." But, so the world didn't end, but neither did the bull market. If you look at this chart of the S&P 500, bull market is still intact, and the difference is that whoever accurately predicts the end of the bull market probably will get some credit because we'll all be here to experience it. And I'm certainly not calling the end of the bull market or the beginning of the correction yet because there are no technical signs of it. We know history tells us there will be an end to this bull market like there has been an end to others, and we will experience a correction. I'm showing the same time cycle analysis that I showed last week, and it still holds. It still looks relevant. And for the last three periods anyway, we know that price moves in higher highs, higher lows, higher highs, higher lows, etc. in an uptrend. And from higher low to higher low, higher low to higher low, higher low to higher low, they've been about 6 weeks, almost exactly 6 weeks in duration. And that about 2/3 to 3/4 of the way through this is when they turn down and at least pull back down to the Ichimoku cloud. Well, where are we at? We're about 2/3 to 3/4 of the way through, and we're getting a couple price bars here showing a pullback. So it looks highly likely, if this pattern is going to continue, that we would at least pull back a little bit. Now, this is not, I'm not calling the beginning of the correction. We would need to see more things fall into place. But here's the good news is, if and when the correction begins, we're going to have advance warning. We won't be able to catch the absolute top, but we will be able to confirm when it begins and participate in some probably dramatic profits, because when the stock market does begin to correct, it goes down pretty quickly, faster than it goes up. So the world didn't end, and neither did the bull rally, the bull market that we're in. But the good news is, stay tuned, and if it develops and if things change, we'll have advance warning. We'll be able to act on that and likely make some really, really nice profit from it. Meanwhile, we're profiting from the bull market and from some individual stocks and sectors that are going down. Let's go ahead and take a look at the gold and oil as we do each week. So here is gold futures on a daily chart. And I had been talking for weeks about the importance of breaking through 1307. Price broke through it dramatically. It has pulled back, and it's down below 1307. But look how we're right at the Ichimoku cloud. It looks like we're beginning to form a bit of a reversal. And this is actually a perfect impulsive move and then correction to a Fibonacci level. So it would be expected to get a reversal pretty quick from here and then take another leg up. And that's what we're looking for. And there may be some trades that I'll be publishing to the stock and option pick subscribers so we can profit from another move up here in gold. So this still looks good for overall bullishness in gold. Here is the crude oil futures contract on the daily chart. And again, to reiterate what we've been saying all year, is we've been in a downtrend. Big radical swings, low, lower high, low, lower high, low, lower high. Oops. Look here, we did not go put in a new low. We put in a higher low. And now we're up challenging this previous high. And what we're looking for is a break up above about $51. A good solid close above that with some momentum. And if so, we will have an uptrend in oil beginning, potentially a new trend. And that looks fairly probable. So we're going to be watching for that. It is not confirmed yet. But if so, we'll be taking trades to the long side on oil-related stocks. We are seeing that the oil industry, not particularly oil suppliers like Exxon and Mobil and those players, but gas and oil services companies are finding bottoms and beginning to rally. And we're in a couple of those trades, and they're in profit and looking really, really good. So watch these key levels here. Good solid close above 5,100. Look for a reversal up on gold and look for the S&P, probably, if it's going to follow that pattern, and it looks like it will, to pull back just a little bit over the next week or two. Well, that's it for this week. I welcome your comments, your feedback. Please type them in on YouTube or on the blog page here, and I try to respond to every single one. I really enjoy hearing from you and answering any questions and hearing your feedback. Well, take care, trade safe. Let's keep the winners big and the losers small and grind out consistent, solid profits. Thanks.